Hello everybody, my name is Mickey Payne. I'm the Vice President of Investments for WNBC. Today I look forward to narrating our first market commentary that we recorded with video. We hope you enjoy and look forward to any feedback you may have as we continue to make sure we deliver information that is hopefully useful to you. It is our desire in this quarterly market commentary to update you on some key information that occurred in the economy and what changes occurred in each of the investment models last quarter. Now let's get started. So one of the key topics of conversation in the second quarter of 2023 was focused on whether the government will pass the bill to raise the debt ceiling. Remember that? Everybody was talking about it. Well, as expected, a deal was reached allowing the government to pay its bills for now. The deal has been positive for the markets as it takes the debt ceiling issue off the table until 2025. Then there was a Federal Reserve, everyone trying to anticipate what they're going to do. Are they going to raise interest rates or lower interest rates? Well, they decided to pause for now. While Switzerland, the UK, and the EU all raised rates between 25 and 50 basis points. As the Federal Reserve watches the key economic indicators, the looming question has been if we're going into a recession and when and if at all. So with the continued strength of the labor market and the unemployment rate of 3.7%, and this is nearly a multi-decade low, and a healthy wage growth of 4.3%, and the Federal Reserve telling everybody in advance kind of what they're going to anticipate doing, they may be able to keep us out of recession, and optimism is in the air again. So to continue our conversation on whether we're going into a recession or not, I thought I'd present this chart to you. So the question for Wall Street has been if we're going into that recession and whether or not and for how long. There are arguments with economists and market analysts that the current labor market, which has been above 6%, may keep the economy out of a recession. So in this chart, the dark blue line represents the CSR composite leading indicator, in other words, the labor market, while the light blue line represents the unemployment rate. As you can see, when the labor market starts tracking above 6%, 3 out of 4 times we've been managed to get out of recession. Now, with that being said, this chart doesn't infer we're not heading into a recession, but that simply we may want to wait and see what the Federal Reserve does, and hopefully they don't overreact by raising interest rates aggressively. The WNBC quantitative model is designed for risk-managed performance over the long term by using several technical indicators. We review these indicators daily to tell us whether we should be in or out of the bond market or minimally or maximally allocated toward equities. This indicator primary focus is to help us identify a high probability of disturbing the markets with the primary focus to help protect you from the potential downside of the markets. So, in Q2, the model maintained its maximum equity exposure while the fixed income allocation continued to remain in cash. However, in Q1 of 2023, the investment committee saw that the Federal Reserve was unloading Treasury securities to clean up the balance sheet. So we saw the opportunity back then to invest in 3, 6, and 9-month Treasury securities and have a continued this strategy through Q2 and reinvested the Treasury securities with an average yield of about 5.15%. The model in the equity exposure area said to sell the iShare Basic Material and iShare MSCI Emerging Market and use that cash to reallocate it proportionally into the existing investments. The WNBC Strategic Hold Portfolio is designed to help investors pursue long-term investment success through fundamental research by the American Funds team. American Funds research includes thousands of face-to-face meetings with companies throughout the world. They visit factories, facilities, and headquarters to help drive deep operational understanding and inform portfolio asset allocation. A long-term approach coupled with extensive fundamental research has allowed American Funds to generate strong results versus their peers. So in Q2 of 2023, some of the key investment themes include increasing emerging market equity exposure and global-oriented capital appreciation focused portfolios, increase higher yielding dividend exposure relative to core equities and equity-oriented growth and income portfolios, increase returns seeking fixed income relative to core fixed income and select growth and income portfolios, and then they manage duration profile and preservation and more conservative retirement income portfolios. So they took the taxable income preservation model and they sold the American Fund's inflation-linked bond fund and reallocated it toward the short-term bond fund of America. And then they took the retirement income conservative model and sold 10% of the bond fund of America to buy 5% of the multi-sector income fund and then 5% of the income bond fund or the intermediate bond fund of America. The WNBC LTAM tactical portfolio is an active management portfolio strategy that shifts the percentage of assets held in various asset class categories to take advantage of market pricing anomalies or strong market sectors. This strategy allows a portfolio manager to create extra value by taking advantage of certain situations in the marketplace while maintaining your long-term investment goals. Managers return the portfolio to its original asset allocation once reaching the desired short-term goal. In Q2 of 2023, some of the key investment themes were they didn't want to make any changes to the equity portion of the portfolio, but they wanted to make changes in the fixed income by eliminating the short duration and the floating rate position and shifting that more toward longer term. So specifically in the chart, you'll see that in the income model, the intermediate bond fund was closed out by 26% and they reallocated 11% into the American Fund's Bond Fund of America and then 15% into the American Fund's Strategic Bond Fund. And if you're in the income and growth model, they took the income bond fund and they closed that out by 22% and then reallocated 10% into the American Fund's Bond Fund of America and then took 12% and then reallocated that into the American Strategic Bond Fund. And if you're in the growth and income model, you'll see that the intermediate bond fund was closed out again by 17% and they reallocated 9% into the Bond Fund of America and 8% into the American Fund Strategic Bond Fund. And then if you're in the growth model, the intermediate fund was closed out again by 8% and they reallocated 6% into the American Fund's Bond Fund of America and then took 2% and put that into the American Fund Strategic Bond Fund of America. The WNBC alternative model is the actively managed multi-strategy alternative investment portfolio. Our model seeks to provide you with access to unique investment opportunities that produce returns with a low correlation to traditional investments. We have two alternative models. One, the alternative income model, which is more focused on generating income, and two, the alternative growth model, which is more focused on generating growth. Both of these models are currently made up of the late-stage venture-backed companies, institutional access to commercial real estate, and institutional access to diversified portfolio credit instruments, and a hedge fund that is focused on long and short equity investments. So depending upon if it's income or growth, we make the adjustments with those particular investments in each of those models. And so in Q2, after extensive research and discussion, the investment committee agreed to reduce our exposure in real estate and public credit instruments. So we cut our investment allocation in Blue Rock Total Real Estate Fund and BlackRock Credit Strategy by half and kept that in cash for now until we see the market is more favorable toward the alternative investment class. So we hope you have enjoyed this format. It's been a pleasure narrating you through this market commentary. If you have any questions regarding your investments or any questions with regards to these models, feel free to contact us. Thank you for the opportunity to serve your investment needs.